Hi, I'm Pitambaran Richardson Pisharadi, welcoming you all to the session of Automation of Trading provided by PDM Advisors Private Limited. Our aim is to simplify the investment process for each individual and to get good execution of the trades at the desired price. I will explain to you how this investment sheet can be used so as you do not have to be in front of the system for the execution of the trade. So let me share your screen and explain the minute details of all the values that has to be seen when we are looking at it. So let me show you the columns that are to be filled up for the investment sheet. Here you can see the heading, which is exchange, stock, side, buy quantity, sell quantity, buy offset, buy target, sell offset, sell target, buying price, selling price, status, max buy quantity, and max sell quantity. I would like to explain each and every row, a column where you have to fill in the details so that the execution of the trade happens very smoothly. Now in column A, we have to write where we intend to trade, whether it is NSE, whether it is for futures and option in NSE, if it's currency, derivatives, futures and option, or it is MCX. So if you're intending to trade in equities, you have to write NSE in block letters. Only use block letters in this particular Excel. Don't use small letters because it will not read. So the basic thing that we have to understand is that you have to use block letters for each and every entries. Now, if you come here, you can use NSE for equities, NFO for futures and option, CDS for currency derivatives, and MCX for commodity. In column B, we have to write the stock's name, symbol name in case of equity, symbol name with the expiry in case of futures, and symbol name plus expiry plus strike price in case of options and options. So there are a small change in Finvasia as well as Zerodha. In case of equities, you have to write in Finvasia, if you're trading in your Finvasia account, you have to write Reliance dash EQ. And if you're trading in your Zerodha account, you have to write only Reliance in capitals. Suppose if you're trading in F&O, if you have to write Nifty, the expiry date 28 July 22, and then write F in case of Finvasia. Whereas if you're trading in Zerodha, you have to write Bajaj Finserv, which is a symbol, then 22nd is the year, July is the month, and then you have to write FUT. Similarly, if you're trading in NFO options, then what you have to do is that in case of Nifty, you are writing Nifty 28 July 22. It is a call, then you have to write C and then the strike price. Similarly, if you're trading in puts, you have to write the uh, strike price with the prefix of P. But in case of Zerodha, you have to write Nifty 22nd is the year, July is the month, and the strike price, and then you have to write full CE or PE in case of calls and put. In case of currency, in Finvasia, you have to write USD INR 27th July 22 F. Whereas if you're trading in Zerodha, you have to write the symbol as USD INR 27 July FUT. Similarly, in currency options, in Finvasia, you have to write USD INR, the expiry date in the month, month, day, month, and year format. Then you have to write C or P and the strike price. Whereas in Zerodha, you have to write USD INR, year 22, expiry month, August, and then 79.5E call or 79.5E put. In case of MCX, we have to just write it's a Silver Micro. There's a spelling mistake. Silver Micro. All should be in capital. MIC 31st August 22. In case of commodity, you don't write F or future like that because it is already understood that in MCX you cannot deal in spot, you can only do in futures. And in Zerodha, you have to check the commodity symbol in your market watch and then act accordingly. Column C stands for the trade plan that you are mentioning this cell. There are three options that are available. One is buy, that is if you intend only to buy a stock in your portfolio. Then sell if you only intend to sell the stock from your portfolio. And both if you intend to buy the stock in your portfolio and also sell the stock from your portfolio. So if you're planning to do both, you have to write both. If you only want to buy, you have to write buy, and if you only want to sell, you have to write sell. Column D represents the quantity that we want to buy at every fall in the share price starting from the buy price mentioned in column J. Similarly, column E is the quantity to be sold at every fall, every rise in the share price starting from the sell price in column K. So now column F. In column F, we have to write the buy offset. It is the difference in the price between two buy levels. Suppose if I'm starting price is 700 and I want to buy the second one at 690, then I have to put an offset of 10 rupees. So similarly, if column G is my buy target, the amount of profit that you would like to book in each executed trade from the buying price. Suppose I'm buying a stock at 700 and I intend to sell the stock at 730, then my buy target should be 30 points. You have to write 30 there. Similarly, in column H, we put the sell set off, that is the difference in the price between two sell levels. In column I, we are putting the sell target, the amount of profit that you would like to book in each executed trade from the selling price. Suppose I sell a stock at 700 and I want to buy it back at 670, then I have to put a sell target of 30 points. Column J, the price where you would like to start buying a stock. This is the price where the buying will start in your account. Suppose I want to buy a stock at 300 when the market is at 325, then if I put a buy price as 300, whenever the market falls to 300, my execution will start. And if the market is trading above my 300 price, my execution will not start. So that is the price you have to put where you want to start a trade. Now column K is the price where you would like to start selling the stock from your portfolio. Suppose your average price is 500 and you want to sell it from 520, then you put the selling price as 520. The moment the market reaches 520, it will start selling for you. And as per the set off, it will continue the sell for you till your desired quantity is completely sold. Column KL status is a status if you want to start, if you type start when you want to trade, and you type wait if you want to stop the trade because of the volatility or any other reason. Suppose you want to stop the trade for few days, then you can just type wait in the status column, then the trade will stop, and whenever you type start again, then the trading will commence for you. So this can be used when you want to stop the trade or start the trade due to any reason. Column M is the total quantity of the shares which you intend to buy. Suppose I am intending to buy say 2500 shares of Nifty Bs with a starting quantity of 25. That means at every set of my 25 quantity will be bought, and the total maximum quantity that will be bought in my trade would be in my portfolio would be 2500. So depending upon the number of trades that you want, you can calculate the maximum quantity that you intend to buy. Similarly, in column N, we put the total number of quantity of shares that which we are intending to sell. Suppose if I have 1000 shares in my portfolio, I put the total max sell quantity as 1000. So these are the things that we have to understand where we want to execute the trade. Here, since it's an investment sheet, we do not have a start time or a stop time. So the market, whenever the market opens, the trade will commence, and whenever the market closes, it will stop trading for you. So there is no start time and end time in this case. Now, I will give you an example of how to plan your execution using this Excel called working sheet. Now here, if I have 1000 shares at an average buying price of 575, that means I am planning to sell this 1000 shares at a gap of say 10 rupees, and the quantity for each trade would be 100. Then I have to put these values over here. I have to put my average price in column K1, the total quantity that I am having in column K2, then the total number of trade plans as set 10. Quantity for each trade would be this quantity divided by this, then you will get this quantity. Then sell offset is at what difference that I would like to sell. The sell target would be 75 and the sell price starting would be at 585. So whenever the market goes to 585, my first order of 100 shares will be executed. And since I have placed a target of 75, if the market comes down to 510, it will buy back the shares for me. So whatever I had in my position, it will remain in my DP. It will remain in my DP as it is. So you can use these calculations to understand what would be my last selling price and what would be my last buying price. So this will help us to understand how my trading is going to commence and how it will be executed. If I have kept 75 rupees as a profit and 100 rupees as the quantity, then each executed trade will give me 7,500 rupees. So if the market goes from 585 to 510, my profit will be booked. And if the market again goes to 585, again my sell will be executed. And if it again comes to 510, again it will be purchased. This is a continuous process. So whenever the market moves in a narrow range, and if it suppose it remains there for few days, you will get multiple trades here. But here while calculating, I have calculated only one trade as each cell. So it could be that in this particular trade you will get multiple trades, but we cannot be sure how much trades we will get. So that is the why I have calculated only one trade per cell. So this would, even if this 10 gets executed, your profit would be around 75,000. And when the shares falls, and if you buy it back, your total buying value would be 5,55,000, bringing your average to 555. Now you can see that your starting average was 575, and when the first round is completed, your average has come down to 555. Similarly, you can see here my last buying would be at 510, and when I'm trying to buy a stock, I would always do below this price so that it becomes a continuous circle. So after my last trade is executed, if the market falls further, then the system will start buying for me because I intend to buy 50 shares at every fall of 15 rupees with a target of 75. So here also the process will remain the same. If the market continues its fall, it will keep on buying for me, and whenever the market reaches my target price, it will keep on booking my profits. So whenever the market, there is a mild swing in the market, your continuous trades will get executed by in the system, and you will have a decent profit. The profit always will depend upon the number of trades that happens in your trading account. We cannot be sure how the movement will happen in the market, but for every trade, what is the profit that we are going to get is assured. So suppose in the buying I get two profits, I get 7,000 profit, 500 profit, and in selling, if one trade is executed, I get 7,500 profit. So using a single stock also, you can plan your portfolio very well and make a decent return for a full financial year. And once these levels are mentioned in the Excel sheet, if you don't want to change it, it will continuously trade for you in a continuous, what do you say, in a continuous process. If the market goes up, it will keep on selling. When the market comes down, it will book your profits. And if the market falls below your 507 last buying price, then it will start accumulating new stock for you in your portfolio. So if the market moves up or down, there will be always some trade in your account. So you don't have to worry about the number of trades or the trades happening in your account, but the target and offset will be varying with each individual's interest. He can put any value that he wants, but the preference would be that your average buying price which you have now and you're going to sell, and the new buying that happens should always be lesser than your previous average price, so that you get some benefits in the new average price. Secondly, the profits booked can be reinvested in the same script whenever the market falls, so that you can increase your portfolio with zero investments. Whatever profits that you are booking can be reinvested in the same script, and your quantity can be increased. It will be just like you are getting bonus shares into your account without investing a single rupee. So the basic concept that we are trying to explain is keep the matters as simple as possible and get a hassle-free trading experience. If anyone is interested in carrying out this trade, you can contact me on my mobile number 894-380-3870 between 3:30 and 10 o'clock. During the trading hours, if you can call me, but if I'm free, I will pick up your call or I will call you back once I'm free. So if you want to go through this process of execution of trade in the algo with least interference, you can contact us and we will help you to trade according to your trade plan. But always select only Nifty 50 stocks or the Nifty Bs and Bank Bs, which are more safer. Don't go for any other stocks outside Nifty 50. And once a stock is removed from the Nifty 50, try to stop trading in that stock and just book your profits and take a new stock which is in the Nifty 50. So always try to select stocks which are really good and gives you good movement during the normal days. So I hope you will find this presentation easy to understand the investment sheets. Even now, if you have any doubt, you can call me back at 894-380-3870 and get your queries cleared. Hope you will be doing good with this Excel and start trading using our automation of trading by PDM Advisors Private Limited. Thank you.